Hello everyone, welcome to this video. My name is Gauri Shankar Das. I'm founder of Wizbase. This video is unedited and most of things will be practical. So if I do any mistakes, forgive. Okay, so without any delay, let's start this video. Recently we have released a stock report, not this stock report on April 18th about the Midcap. I'm talking about a stock report that we have released. This one, let me show you this strategic investment in the auto sector. Okay, in this report we have talked about the API investment pattern. Recently we have seen the FPIs are heavily investing in the automobile sector as well as in the capital goods sector. So this data, where we got this data we got from the NSTL website. If you go to the NSTL website and you type API monitor there, you'll find this data. You'll get some Excel sheets there. If you crunch all the data, if you club it together, you'll get something like this. So if you see the 6 months buying pattern of the foreign portfolio investors, you'll see they're heavily investing in the automobile sector as well as in the capital goods sector. Automobile sector, we have talked about the opportunities in the automobile sector in that report. The TVS Motor and the Bajaj Auto, many things we have discussed there, the Maruti and all we have discussed, all the opportunities there. In this video, we are going to talk about the capital goods sector. Why capital goods sector? Let me first show you what is the budget size this year. Indian government released a $550 billion budget this year. $550 billion in 2023. Yeah, this is a very big budget. And every year it is increasing. But what is the main attention of this budget? Capex. Government declared a 10 lakh crore of capital expansion. That is around 33% higher than the previous year. So if you see what is the capex size, this year it is 3.3% of GDP. Last year it was 2.7% of GDP. So it almost increased 33%. Yeah, it seems very nice and it's a very big number actually. Okay. So all this capital expansion, why the government is suddenly doing this? Because government want to attract the foreign investors to directly invest in India. I'm not talking about the foreign portfolio investor or foreign institutional investor. I'm talking about the FDIs. Foreign direct investment, what is the difference? Let me tell you first between FIA and FDI. FDI people, they directly invest in the assets, in the tangible assets like the plants, the machineries. Foreign institutional investors, they buy like stocks, they have some intangible assets like that. Okay. And this FDI, why it is needed? Because without FDI, the China would not have grown this much. The Singapore would not have grown this much. So to develop a country, the FDI is the need, and India now understands that, and India is now investing heavily on its infrastructure. That's why it is releasing such a high capex budget. But this 3.3% of GDP capex budget, is it too much or is it enough? No, it's not enough. If you look at China was almost spending 4 to 5% of its GDP when they were in our growth stage. Let me just check if this video is being recorded or not. Yeah, this is getting recorded because sometimes I lose the mic or I turn off the camera, some mistakes happen, so that's why I'm checking. Yeah, China was spending almost like 4 to 5% of GDP when they were in our condition, and we are now just spending 3.3% of GDP. That's not enough. But the good thing is, in coming 5 to 6 years, where we have such a big plan to become such a bigger economy, we have to spend high, and India will spend. India have to spend because that's the demand of foreign investors now. And because of that, which sectors are getting benefited? The infrastructure and the railway transportation sector also. Why I am talking about the railway transportation sector specifically? Because if you talk about the industrial communication, railway transportation plays a big role. How big role it is? the market share will be around like 40%, the railway transportation, if you talk about the industrial communication. So without railway, the industries cannot function. India have to develop the proper infrastructure for the railways, and for that Indian government has allocated 2.41 lakh crore to the railway sector. And what it was in the previous year, it was like 1.4 lakh crore. Let me show you just the data, just a second. Yeah, here you see, in 2023 government declared 2.41 lakh crore for the railway sector, and previously it was 1.4 lakh crore. And if you just go like 5-6 years back, or 7-8 years back, 7-8 years, 2016 to 17, let me show you here, the government was spending only 44,000 to 50,000 crore per the railway budget. So now from 44,000 crore to 2.41 lakh crore in just how many years? If you see, it's around like 3, 6 to 8, okay, 8 years. In 8 years we have gone to such a high number. Okay, so this extra 1 lakh crore from previous year that we have given to the railway budget, who will get this amount? The railway infrastructure making companies. And who are the leading companies in this infrastructure making? That we are going to talk about. That opportunity I am going to talk about now. Okay, so we'll talk about the stock IRCON International Limited. We have marked it as long-term pick. I'm not advising this stock. Disclaimer I am giving here. This is not for this is not advice. You have to contact your financial advisor before investing in this stock. Just give you the research. For the education, you have to know the data. That thing we are trying to give you. Okay, the stock IRCON International Limited, it's a public sector company, and 92% of its revenue comes from the domestic railway projects. Okay, and what is the good thing? I talked that railway has gotten all the attention from the government this year. Now first we will talk about the technicals, then we will go to the fundamentals. First let's talk about the technical of this stock. Technical, this is the diverse box breakout of the IRCON International chart. Let's go to the chart from the trading view and see. So just a second, let me show you IRCON International chart. Here you go. Okay, so this is IRCON International chart, and this stock listed in 2018. Okay, 2018 to this, it's like few years back it got listed only, but the stock has never fallen down, and it has never given a rally too. So the stock has not given a rally, or it has not fallen down also. It has not fallen down, that's a good thing. That thing I want to emphasize. Why the stock has not fallen down? Because it's fundamentally a strong company. I'll show you how fundamentally strong this company is. So the stock, what are the technical reasons? This is a diverse box. The diverse box, what it is, a diverse box is when the stock trades in a range. If the upper line, if you take the resistance, and lower line is the support, if the stock trades in a range, that range is called the diverse box. More the stock trades in the range, more consolidated, and when it gives a breakout, bigger chance of rally. So here the stock, if you see, just let me show you for how much time the stock was consolidating. So from here to, if you see, up to this, you can see it's 1036 days. So almost like 3 years the stock was consolidating, and it was bounded in this region. Now it gave a breakout in 2022 November. After it gave a breakout, it has done its retest. Let me show you the line chart that you can see. Here it has given a retest. What is a retest? Okay, let me just show you here. If the stocks gives a breakout, okay, if this is a breakout, then stock have to retest before it goes higher and higher. Okay, so that's the retest. The stock has given a breakout here, and now it has done a retest, and after it has done a retest, now it is going up. And how it is going up, let me show you. this is an inclined trend line breakout here. Okay, here you can see the stock. This is the inclined trend line I have joined. Okay, this has given a breakout here. When I posted that stock report, the stock was trading somewhere like 57.35. You can see it also here. The CMP, it was 57.45. okay, so the stock was trading at 57.45. now it is trading at 62 and not very high from the price. It is almost like 8% in just 2 days. I just posted the stock and the stock given a big rally. I think that's a coincidence. I don't think the institutional investors are buying on my report. It might be a coincidence. Okay. So 8% the stock has given a rally. That's not a very big thing. The stock might again come back to this level or some level, or may not. But there lies a big opportunity of the stock might go very high. 75, 80, not a very big number. Okay, so that's the technical reason, but I'm not suggesting now the stock. It's just a research and you have to buy on your own consciousness. Now let's see what is the fundamental reason of this stock. Fundamentally, if you see, I'll just point out the fundamental reasons. First thing is the budget allocation to railway, that we have already talked about. The government has declared a budget of 2.41 lakh crore, a 1 lakh crore higher than the previous year. This 2.41 lakh crore. Okay, so I am highlighting that this 1 lakh crore more, 1 lakh crore more. Why? See, in 2021, June 2021, the stock order book size was 34,300 crore. In June 2022, the stock order book size is 42,000 crore. Okay, 2021 it was 34,300 crore, 2022 42,000 crore. What do you think, after getting such a higher budget, the railway sector, what will be the order book size for this company? Okay, we don't have the data yet from the company side, but it will definitely be higher because it's a public sector company and it would have gone good projects, because the government always prioritizes the PSUs first. Okay, so definitely if it has gone 34,100 crore in the 2021 and 2022 42,000 crore this year, after getting 2.41 lakh crore, such a higher bigger capital allocation, the stock order book size, you just imagine what it would be this year. June data, when the June data comes, we will know. Second thing, March quarter result, this will be very high. I think it will be high. It's just a prediction. I'll show you how I'm predicting like that. If the quarterly result will be good, the stock has a bigger chance of giving a good rally. Why I'm expecting this March quarter will be good? Just see, every March quarter the sales data. Okay, so this is the chart of the sales from 2006 to 2022, 31 December. Okay, so this is from Skinner.in. If you go to the Skinner.in, if you go to the sales and margin, you'll see here the sales is increasing every year. That is fine. That is good actually. It is increasing every year and it's a good increase. I'll tell the numbers at what rate the sales is increasing, but just see here the bars. March bar, every March the quarterly result is always high. This March, this March, this March, every March the quarterly result is always higher for this stock. Okay, and this year, after getting such a good budget, the railway, the order book size, if it will be higher, definitely the March quarter is going to be higher, and it has a record of giving all the March quarter results good. So this year, after getting such a good order book size, the results are going to be good. The March quarter results, that I expect, because it's obvious from the past chart. If you see the sales chart, that's the second reason, fundamental. And what are the other factors? I was talking about the sales growth. impressively, the stock has given a 19% growth in sales in last 5 years. If you take any good company, 19% growth in the sales is very high, is good, very good. And the profit growth, if you see, it is around like 12%. 12% growth in the profit, 19% growth in the sales. The stock is a heaven. It seems heaven. The sales growth and the profit growth, if you see, this is, I'm talking about the 5 years. Okay, and this is a PSU I'm talking about. Okay, and the next thing, the company debt to equity ratio just 0.29. The company do not have much debt. By the way, it's a infrastructure developing company, the railway infrastructure. Generally, when the infrastructure companies operate, they take the debt first, they do their projects, and they get paid later. But this company, if you see, they have a very less debt in their balance sheet, 0.29. It's a very good number, 0.29. Very strong company, financially very stable. This company is. And next thing, the EPS and PE ratio. The company's EPS, earning per share, it is 7.22. See, this is a stock around like 57 rupees, and the EPS is 7.22. It's not bad. The earning per share 7.22 is not bad. It's good. And the P ratio, if you see, it is 7.45. I have seen companies with EPS 6-7 rupees. EPS is earning per share. In one share, how much you are earning? The company is earning 6-7 rupees and getting a P multiple of 30-40 times, 50 times, 60 times. Here the P multiple is 7.45. So that thing is very attracting. The valuation seems very attracting. The ROE, if you see the company's ROE growth, it is around like 12%, 13%. Let me check for the IRCON. Just a second. Here we go to here. Okay, the ROE 13-14%. The company ROE is. Okay. So the company return on equity, it is giving you 13-14% return. It is giving you the profits. But the stock price change, if you see, it is not 13-14%. It will be around like 7% or 8% around. The stock has not given such a rally as per its growth in the profit. That's the third important reason why I found it very attractive. The industry P, if you see, it is around like trading at 27 times. Everything is good in the stock that we have discussed. One thing that I found negative in this company is the decreasing operating profit margin. The competition is increasing in these infrastructure companies. L&T's Tata projects are coming also. These are the private players, however, but even they are also putting their tenders. Okay, so if there is a competition, sometimes the operating profit margin reduces. So that can be one of the reasons why its operating profit margin is decreasing. Okay, not a very high rate, just little bit it is increasing. That can be a little bit concern, but however, the company's increasing sales and profit, that has a very bigger impact than this little bit declining of the operating profit margin. That's why I found this stock attractive and I released this stock report. Definitely I find this stock, whatever it is trading, this should not be the price of the stock. Looking at what the industry is paying to this type of companies, and so I released the stock report. Hope this finds you well. And also I have released the Mazagan Dock Shipbuilders Limited chart and Bharat Electronics Limited. I found the opportunity there also, and I have discussed on this. You can see those in that report, but definitely IRCON International was my first pick and for a long-term pick. Thank you everyone, and bye-bye.